Welcome to our comprehensive guide on cryptocurrency exchange operations and regulations. In this video, we'll explore how cryptocurrency exchanges work, the different types of exchanges, and the regulatory landscape surrounding them. Let's start by defining what a cryptocurrency exchange is. A cryptocurrency exchange is a platform that facilitates the buying, selling, and trading of cryptocurrencies. It acts as an intermediary between buyers and sellers, enabling users to exchange digital assets in a secure environment. Now, let's take a closer look at how these exchanges operate. Exchanges operate using order books, which list all buy and sell orders for a particular cryptocurrency. When a buyer places an order to purchase a cryptocurrency at a specific price, it goes into the order book. Similarly, sellers list their orders at desired prices. There are two main types of orders. Market orders. These are executed immediately at the current market price. Limit orders. These are set at a specific price and are executed only when the market reaches that price. Once an order is matched, the exchange facilitates the transfer of cryptocurrency and fiat currency between users. The exchange typically charges a fee for this service, which can vary based on the platform and transaction volume. There are several types of cryptocurrency exchanges, each catering to different user needs. 1. Centralized exchanges, CEX. These are the most common type of exchanges, where a centralized entity manages the platform. Users create accounts and deposit funds into the exchange's wallets. Examples include Coinbase, Binance, and Kraken. 2. Decentralized exchanges, DEX. DEXs operate without a central authority, allowing users to trade directly with one another using smart contracts. This enhances privacy and reduces the risk of hacks. Examples include Uniswap and SushiSwap. 3. Peer-to-peer exchanges, P2P. These platforms connect buyers and sellers directly, allowing them to negotiate terms and complete transactions without intermediaries. Examples include local bitcoins and Paxful. 4. Hybrid exchanges. These combine features of both centralized and decentralized exchanges, aiming to provide the best of both worlds. They offer the security of decentralized platforms while maintaining the liquidity and user experience of centralized exchanges. With the rise of cryptocurrency exchanges, regulations have become a crucial aspect of their operation. Regulations vary significantly across countries, reflecting different approaches to managing the cryptocurrency market. Some countries embrace cryptocurrencies and blockchain technology, while others impose strict regulations or outright bans. Most regulated exchanges implement Know Your Customer, KYC, and anti-money laundering, AML, policies. KYC requires users to verify their identity by providing personal information and documents. AML procedures help prevent illicit activities by monitoring transactions for suspicious behavior. In addition to KYC and AML, exchanges may need to comply with local financial regulations, including licensing requirements. Some countries require exchanges to obtain licenses to operate legally, while others have more lenient regulations. As the cryptocurrency market evolves, regulations are also adapting. Governments are continuously working to establish clearer guidelines to protect consumers and ensure market integrity. While cryptocurrency exchanges provide valuable services, they also face several challenges. 1. Security risks. Exchanges are prime targets for hackers. High-profile breaches have resulted in millions of dollars lost. Therefore, exchanges must invest heavily in cybersecurity measures to protect user funds. Number 2. Market volatility. The cryptocurrency market is known for its price fluctuations. This volatility can lead to sudden changes in trading volumes and liquidity, impacting the operations of exchanges. 3. Regulatory compliance. Staying compliant with ever-changing regulations can be costly and complicated for exchanges. They must allocate resources to ensure they meet legal requirements in different jurisdictions. What does the future hold for cryptocurrency exchanges? As blockchain technology continues to evolve, we can expect exchanges to adopt advanced technologies like artificial intelligence and machine learning to enhance security, improve user experience, and streamline operations. Additionally, as cryptocurrency adoption increases globally, more users will seek reliable and user-friendly exchange platforms, driving competition and innovation in the space. With clearer regulatory frameworks, exchanges may gain more legitimacy, attracting institutional investments and paving the way for broader acceptance of cryptocurrencies. In summary, Cryptocurrency exchanges play a vital role in the digital asset ecosystem. Understanding how they operate, their regulatory challenges, and future trends can help you navigate this exciting and evolving space. Thank you for watching. If you found this video informative, please like, share, and subscribe for more insights into the world of cryptocurrency and blockchain technology.